What's up, everyone? Thanks for stopping by my channel. My name is Cedric with Says Dividends. Today is another video. It's my fifth video, so it's week 5 of my ULTY investment update. ULTY is a ultra option income strategy ETF from YieldMax. If you go to their website, yieldmaxetfs.com, you can search for all their ETFs. ULTY is an actively managed ETF that seeks to generate weekly income from a portion of covered call strategies, each on a U.S. listed security. Investing in the fund involves a high degree of risk. Due to ULTY's investment strategy, ULTY's indirect exposure to gains, if any, of the share price returns of the underlying securities is capped. However, ULTY is subject to all potential losses. So basically what that means is when the securities go up that ULTY is invested in, that doesn't necessarily mean that the share price of ULTY is going to go up. It may slightly go up, but it's not going to match what the underlying securities are doing because they're capped. However, the risk comes into play when those underlying securities drop in price. ULTY can be subject to all those losses as well. So why am I invested in it? Well, I look at the performance since about the middle of the year. So right around March, April, it started going through a transition phase as it went from a monthly payer to a weekly payer, and they changed their investment strategies, and it transitioned into something completely different than what it was a year ago. Since then, if you look at the chart, now this chart's from Seeking Alpha, you can see it's pretty steady. There's not a lot of share price dropping. There's slight drops, but that should be an opportunity to dollar cost average. Maybe the share price between 7 and 5 is the new normal. And if that's the case, then that makes it a great buy. And so, that's one of the reasons I'm in it. I think it's a great buy right now. And especially with the income that it pushes out. If it can stay over 9, which it always has, well, I won't say always, there's been slight dips under 9 cents per share, but it's only been like a week, and then tons of weeks well over 9, even 10 cents. You have to go all the way back to June. If I remember correctly, looking at the distribution table, you have to go all the way back to June just to find a week that it dropped under 9 cents. Last week's distribution was 9 cents. It was 9.21 cents to be specific. So I really like that ULTY showing some consistency for quite a while. Now, is this something that you're going to invest in, for years? Probably not. But if ULTY keeps things up, and changes their strategy and they keep adapting, maybe you will. But, as the way it's designed right now, I will say not. So let's take a look at my portfolio and my position at ULTY. I spent over $10,300. You see there is $10,354.36 of my own capital in ULTY. I have 1,812 shares. My average share price is 5.71, which is slightly above the current share price. And I haven't used any margin or anything like that. I'm too afraid to. But ULTY is margin eligible across probably all brokerages. It just depends on the percentage. So the maintenance requirement is different depending on if you're on Robinhood or if you're with Fidelity. I invest through my brokerage is through M1 Finance. And here's a snapshot of the gains and the other information concerning ULTY. So as of right now, recording this video, the share price is 5.49. So I showed you earlier that my capital invested is $10,354.36. That amount has dropped $406.03 for a current value of $9,948. But my dividends so far has been $644.36. And that's only been in 4 weeks, by the way. I would say 4.5 weeks because I started late August. So I didn't get a full distribution. I just got this partial number. Yeah, I invested like with the ex dividend date. But my total gain, which is how you should look at OT, is $238 in deposit. Now, if that market gain can float, if that share price can float around in the five and a half, $5 to $7 range, I'll be in a good place. Like right now, like I showed you earlier, my average share price is $5.72. So if it goes up, my market gain goes up, right? Does that mean that I should stop buying more shares and all that stuff? No. That's a good sign if the share price go up. But another thing is, it's also a good sign that if it remains steady as well, and the distribution remains steady. If it hangs around the 9.2, whatever, hey, I'll welcome a 10 cent per share distribution as well, like it used to early in the year. I'm fine with that too. If OT can show some consistency, I would be crazy not to invest in this. I don't care about expense ratio. That's taken out before I even see my distribution. So keep it up, OT. Now let's take a look at a spreadsheet that's just tracking all of September. Everything in blue I have spoken about already in the previous episodes. The lines in green are the newest additions to my spreadsheet that we will talk about now. 926, I invested $160. I made two investments in the same day, so that's why it's split. Those share prices at the time I purchased were 5.46, 5.45 for 19 shares here and 10 shares here. And cap, meaning capital. And then on 9/29, which was last Friday, I got a distribution of, or I'm sorry, 9/26 was actually the distribution date. So I received $161.47. That got reinvested today at a share price of 5.47, and that got me 29.522 shares, and those were via a drip. So for the month so far, because there's 2 days left, today and tomorrow, who knows, I may make another investment or capital. So in September so far, 269 shares. August shares were 1542, and you add those together, comes out to that 1812, 1,812 shares. My goal is to get like 1,000 a month. If I can get $250 a week in distributions through ULTY, that'll be great. And then I could go to my next goal. My main goal is to hit $3,000 in distributions per month, which would cover all my expenses, including rent. And this is only a small part of my portfolio. And also, this isn't my only income outside of my job. Like I have real estate as well. So the idea is to create as many money machines you can in case of job loss, whatever, right? Like you don't want to trade your time for money. All this tax stuff, like I see people disputing taxes, they're talking about this and they're talking about that. Like, look, there's nothing worse than getting taxed after trading your time. Employees, I'm still an employee. We get taxed worse than anybody else. So sometimes people talk about taxes too much when it comes to investments. Like, look, I don't like, let's say I would rather get taxed 35% on a distribution. This is hypothetical. Let's say OT taxed you 35%. Now that's more than what you get taxed at your job. I would take that. I would be fine with that. I would just have to invest more and factor in those taxes, but I don't have to work for that money. That's the thing. I can go enjoy life. and I just need to make sure I'm covered as far as taxes go. But I damn sure don't want to stay trading time for money. You must really got to like your job. And I can tell you right now, most people don't. So that's my video for today. Thanks for stopping by. Again, if you liked what you heard and saw, hit that like and subscribe button, and I will update you guys next week on my ULTY journey. And then, I've restructured my portfolio as well a lot from my earlier videos. So maybe I'll do some updates on that and show you my overall portfolio, overall dividends, and things like that. Uh, but until then, I'll talk to you soon.